Now, Xolani, drinks maker Distell expects full-year profit to rise nearly 20%.
Good evening, Bongiwe. Yes, surprisingly, even under the alcohol ban, the group says its profit for the year is likely to reach 782 cents per share. However, a fourth ban on alcohol sales here in South Africa has cost it about 30 million rand so far. Distell, which is in talks with Heineken over a possible buyout, was hit hard by prohibitions on the sale of alcohol last year, with the new restrictions affecting them even further. The drinks maker says this has led to an increase in illicit alcohol trade and resulted in lost revenue for tax authorities. Distell added that the recent unrest in the country had cost it an estimated 100 million rand after one of its distribution centers was looted and damaged. Analyst Madete Tulare has more.
Distell has been obviously, having a tough time, especially with the on and off lockdowns. But nonetheless, remember that it is South Africa's biggest wine exporter, and it is also a takeover target for Heineken. And they've actually reported an increased revenue outside of the South African market. It has said that their international business obviously expanded as they obviously boosted their online sales and raised the margins, especially in the premium whiskey brands. And I think the sales for this segment is expected to rise about 10% from a year earlier, with margins also improving compared to pre-COVID levels. They have been led by the likes of Mozambique, Nigeria, Ghana, Zambia. All the units outside South Africa gained. And from a corporate perspective, we know that Heineken, which is the world's second largest brewer, in May they said that they are in talks with Distell about a possible acquisition of most of its businesses. We do know that the talks are still continuing, and they have said that the local unit has taken a knock, especially with the liquor bans, which are obviously aimed at reducing the alcohol-related cases at trauma wards and obviously help hospitals cope with the surge in the coronavirus infection.
Xolani, it looks like margins are improving. Pepco has reported a rise in earnings for the 9 months through June.
No, absolutely, you're right. The retailer says revenue increased at 13.9%, rebounding from a low base in 2020 when it could hardly trade at all in some months due to lockdown restrictions. The group says revenue totaled 53.9 billion rands. Pepco, which is majority owned by Steinhoff International, says it also completed the refinancing of 2.5 billion rand in terms of loan funding. The owner of Pep and Ackermans clothing chains says this further strengthens the group's liquidity as well as debt repayment profile and reduces the cost of its funding.
And Xolani, Vodacom Group has had a good quarter financially, with revenue rising to nearly 25 billion rand. This is only in the first quarter.
Yes, indeed. Still, the strong rand did impact international service revenue, which fell by 6.3%, according to the group. Vodacom South Africa's largest service provider says revenue was up 5.2%, while its international portfolio delivered normalized service revenue growth of 13.5%, supported by M-Pesa revenue growth. In South Africa, data price cuts led to increased demand. In South Africa, South Africans have rather benefited from a further 14% price reduction in the 1 gigabyte 30-day data bundle. SA's biggest mobile operator also noted that the damage to infrastructure from the wave of violent protests that hit Gauteng and KwaZulu-Natal last week has not been material.
The main impact on the second quarter numbers for Vodacom has been the stronger rand, and that's impacting the international operations. So the rand actually strengthening to the end of June for their operations by about 20%. So quite a big impact there. In terms of, I think one of the main areas to look at is the financial services area, and that's actually grown from as a group level by 17.9%, which is quite strong. Locally in South Africa, service revenue up 5.2%, and international driven also by the stickiness of their M-Pesa product, up 13.5%. So I think overall not a bad result. Currency impacting it negatively, but the market should be reasonably happy with that.
Now, Xolani, this is hardly surprising. It's been a good year, of course, for tech stocks. I mean, Twitter reporting that its advertising revenue was up 87% from a year ago.
Yes, a slow start there for Twitter for a couple of years, but total revenue, which also includes revenue the company earns from data licensing, rose by 74% year-on-year, which actually beat analyst estimates. Since the start of the year, Twitter has introduced products in new areas like audio-only chat rooms and newsletter publishing in an effort to double its annual revenue by 2023. Twitter forecasts that the third quarter total revenue will be between $1.22 billion to $1.3 billion by the end of the year. Before I hand back to you, Bongi, well, let's take a look at another difficult day for the rand locally, but a good day for local markets. Let's see how the JSE closed today.